What's up, everybody? This is a recap for the DOTS bias indicator. Today is September 30th, I think, Tuesday. So I'm going to go over this trash can of a price action day. I'm going to show you how the DOTS could have been utilized and how I was done using NQ stats, probabilities, before the dots really gave me anything actionable. So what I mean by that is when the dots are mixed, I say this all the time, when the dots are mixed, do nothing. Dots being mixed, meaning 4 rows aren't all one color. And so I'm going to take you through what I did and then show you how the dots could have been used. So going into the day, I like to look at things sequentially. So I use something called trading sessions, where basically you look at the profile of Asia in blue and London in this yellowish color, this box. So when this is partially bearish engulfing, meaning it's not fully engulfed, London to Asia, it is partial bearish engulfing. So when this happens, I think the stat is about 74% of the time, maybe 72% of the time. London low is the draw. So as long as London high doesn't get hit, London low is my draw. And so, excuse me, as you can see, when the market opened, I'm going to show you how I took a setup that didn't require the dots. So the market opens, and London lows is the draw. So the market opens. You can see right off the jump, the dots are mixed. So the adage I said, when the dots are mixed, do nothing, unless I see measured moves in the direction of the probabilities of the NQ stats. And what I mean by that is I use Fibs, a very specific way to identify what I call measured moves or structured moves. And so it's all predicated off of a 50% level, trading to and through a negative 23 or 123% move, usually to the negative 61.8, which is this faint red line. And then I'll show you how I draw extended fibs to help inform an entry function. So this is a 30-second chart just because it made the fib look clean. So high to low, 50% and down. And so again, London low is the draw due to the ALN session London stat. So you'll see price starts displacing lower. And again, in a 1-minute chart, the dots are mixed. Otherwise, I'd be looking for red dots to the London lows. So you can see price trades to the negative 61.8, which is this line, and through. So when this happens, rather than look for a bounce from the negative 23 to the next, this is high to low, high to wherever this bounces. So if this is negative 23% bounced, this would be the fib. But because price closed below the negative 61.8%, and I have the London low due to the London set, I'm looking for the anchor of this low to wherever price stops, and then looking to short the green 50% line to London low. So the fib is wherever price stops. So you can see we trade lower. The London low had not yet been hit. So this trade happened very quickly. So there's a fair value gap right here, and then the 50% level traded. So I was short here to London lows. I don't have a screenshot ready. I'm kind of doing this video on the fly, but I posted this execution in my Discord. So again, dots are mixed. So if you're just trading the dots solely, you do nothing. So London low hit, and you're just on your hands. And so you can see for the remainder of the morning, or at least for the next hour or so, the dots were mixed. And so again, if the dots are mixed, do nothing. So sequentially, the first thing I look for are the ALN session. So London low was hit. So that was the first thing. So next thing I look for is the NQ stat initial balance. So that takes the high and low of the first hour. So 9:30 to 10:30. And then you see where price is relative to the 50%, which is this dotted line right here. So I'm just going to fast forward to, so again, dots are mixed. When dots are mixed, do nothing, and you can see price is just absolute dog shit. Absolute dog shit. Okay, so at 10:30, price closes in the upper 50% of the first hour initial balance. So what this means is I'm targeting the initial balance high. I think the statistics are, when this is the case, I think it might be 80%, 82% chance of this IB high getting hit. Call it 70 to 80%. I don't have the stat in front of me, but likelier than not that this IB high will get taken before this low gets taken. So how I like to pair it with the dots is very simply, I like to look for all green dots to a statistically relevant draw on liquidity, or some other kind of entry function if the dots doesn't present itself. And so I'll show you how I actually entered this using an IFVG. So I entered right here. I'll show you very quickly. If you look at ES, hopefully that'll, yeah. So you can see ES made a lower low right here, while NQ made a higher low. So using that, we had this inverted fair value gap right here. So again, dots were mixed, but using NQ stats, IB high was to be targeted. So that setup worked pretty quickly, again, without the dots. So that was my day. Those were the two setups that I took. But let me show you how the dots could have been used after that. So again, all of this, when the dots are mixed, do nothing. So you can see we get our first green dots right here. And so the next logical draw on liquidity is the London high. And so one thing I like to use, one potential entry function, is called the one dot entry function. So I like taking dots setups, dots momentum to liquidity. So one dot entry function would be an entry on the close of this 1 minute candle, and London high being right there. That's not a good risk reward for one dot entry function. So ideally you see, you just go through your checklist of other entry functions to help make the risk reward, because you want to take dots to liquidity, more worth it. So you end up seeing this 8 EMA, and the red is the 20 EMA hold. And so a potential setup could be just a very simple EMA pullback where you're seeing EMA's hold targeting highs. That ended up working. But it's dots to liquidity. So this setup, one dot entry function would not have worked. Trading back to an order block here, or EMA's holding, that would have worked. But then we get back to mixed dots. And so again, I like to pair NQ stats, probabilities, so IB high, with the dots. And so when the dots aren't presenting themselves, I'll look for other kind of setups like IFVGs or just other things to look for. And so the next item is the noon curve. So this is all sequential. So the first one is ALN stats, London lows. Second one sequentially is the IB high. And the third is noon curve. And so basically from 8 a.m. to 10 a.m. is one, I guess, quadrant. So when you think that a low is made in the first quarter from 8 to 10, and when a high is broken in the first quarter, so like this high gets broken, I'm not explaining this super well. I think there's a 72% chance that a high will be made before this low gets made, meaning the low is made in the first half of the day, so a high will get made after 12 p.m. And so NQ stats have me looking at this high. So this high broke the 10 a.m. high. 8 to 10 a.m. high. And so I'm not looking for shorts to this low. And so you'll see that there were red dots right here that I think could have been a scratch, may have been a stop out, but I want everything to align. So I want my NQ stats probabilities to align with the dots. It's possible that this low could have gotten taken, which would have made the noon curve irrelevant, but I want everything to align. And then, so once lunch happens, noon, basically I'm turning the dots off until 1:30, and then I want to see afternoon price action. So this dot setup, this red dot setup, to me would have been avoided because the NQ stats noon curve was suggesting that this high would get taken before the AM session low. And again, we get a column of green dots here, but I don't trade the dots from noon to 1:30. Okay, so then we'll go to the afternoon session. So I'll call it after 1:30. And I'm going to use the same logic for this ALN short right here. The same logic will be used in the opposite direction. Again, we have noon curve as the target. So you'll see a very orderly move up with a 50% level respected. So right here. So this to me is not a take. You want to see the measured move get set up. Again, dots are mixed, so when dots are mixed, do nothing. But I want to see towards this noon curve high, which is the probabilistic target, I want to see a move to the -23 and through it to, we get a low, a high, retrace to 50%, and I want to see displacement. And so once we get this, I want to look for a pullback to the noon curve high. And so that'll be, again, looking for a high to wherever price stops. And then in this case here, looking for a 50% extension. So you can see we get a pretty good, we got a rejection off the 50% to the direction of the noon curve high, which is the drawn liquidity. We got to move through the -23%. And then we are pulling fibs. So this was a little dirty. So this 12.75 area. And then another extension to this. That didn't even fill. So the -6.8 hits. So in this, we got a green dot here to the direction of the noon curve high. You can see right here, we reject the extension fib, and then again, another green dots. And again, the NQ stats are informing the noon curve high as the drawn liquidity. And there we go. I don't like trading afternoons just because we get these kind of grindy, choppy conditions. But this was a very measured move, which played out very nicely. So, all things considered, again, you like to see distance between where the dots turn green and your noon curve high, which is the target. I think the ATR at the time here. Call it 15 points. Give yourself some room. So that first one dot entry function, if you had patience, would have ended up working out. But again, it's, you got to find the one dot, you got to find the entry function that works for you. But again, so you have the NQ stat noon curve, probability suggesting this is the draw, and then you get green dots involved, and you're either long already, looking for a long, or at minimum not trying to short. So hope that helps. This might have been a rambling video, but just hopefully helps give some context into you want your setups to derive from your draws on liquidity. So we had green dots here, very close to the draw on liquidity. Was a risk reward worth it? Look for another entry function. Here you have red dots, but the noon curve was the draw on liquidity with higher probability. So avoid these, even though 1 hour probably, or a 1 minute ATR probably would have been hit. So again, you just want to stack confluences in your favor. I like to use the dots with NQ stats, and yeah. So 7-day free trial, link in the bio if you want to test the dots. And please, if you made it this far, give me any feedback. Yeah. So thanks a lot. Have a good one.